Once upon a time, investment banks and PE firms kind of kept to their own lanes, but it now seems like they're all in the same business.
Yes, that's exactly it, Scarlett. We're really seeing in the leveraged finance market, private equity firms are really trying to come out and get bigger in the underwriting business. The leveraged loan market is a $1.2 trillion market, so there is a lot of money to be made in fees, and credit shops are seeing this as opportunity.
So one of the examples you gave in the story, obviously the company that was looking to borrow ended up getting much better terms going through KKR than it had with the previous lender that it was working with. I guess my question is, how do these private equity firms, how are they able to offer such better terms without losing their shirts in this?
Right. What's really interesting about this is that the terms were so much better that even after considering all the breakup fees, the KKR financing was still a better option. One thing that's important to think about is that these still are leveraged loans. They're still commanding relatively high interest rates. Like in the case of this loan, we're still looking at LIBOR plus, I think, about 650 on this. So that is, a pretty high interest deal, and as a result, some of these new lenders say that they think that they can stomach the risk.
So for Barclays, it didn't lose out completely either because it got paid the breakup fee as well, and then it didn't have to do the hard work of selling the loan to investors.
Yes, exactly that. So this is kind of an example of a loan that might once have been syndicated going to the private credit market, and certainly saves Barclays some work. They still get a little bit of money in the end. What's interesting, too, is that there's no bond component to this deal anymore. So when you're thinking about...
Why does that matter?
Well, so bonds typically have the highest interest rates of all. So, if you're a company, if you go to a unitranche, as they're called, you're probably saving a little bit of money. And one other thing is that there's a lot more disclosure on a bond. So if you're a company, you kind of want to keep your financials close to yourself.
Yeah.
Maybe not disclose that to as many people.
Well, that should come in handy with the next crisis. Other than KKR, who else is playing in this?
It's pretty much been across the private equity space. Apollo has talked a lot about how they're really gearing up for a privatization of the credit markets. Carlyle has also been looking a lot at these kind of deals. And, the really interesting thing is that these guys often are going to the credit markets to get these loans for their own deals. And then now they want to be on the other side and even lend to others.